It certainly looks like the April data, while a surprise, are probably catch up to the supply disruption that took place in February and March. On a forward-looking basis, I think the collapse in the April export new orders PMI would suggest that Chinese exports in May and possibly June will be weaker. And that would make sense, given that ultimately the largest markets for China are in the West, and those economies have been in lockdown. So these numbers look to be somewhat distorted just by, the whole supply chain disruption and the shutdown in China earlier in the year, and are about to be probably distorted further by the shutdowns and lockdowns in the West that began later.
So does that mean that any sort of V-shaped recovery that some out there had been suggesting was possible in the wake of the data points that we have been seeing is now something more of a fanciful notion?
Well, when you fall as much as global economies have fallen, all recoveries are likely to be V-shaped in a sense. When you fall as much as they have, recovery growth rates are going to be large. However, the challenge is going to be getting back to the original levels of activity, much less the trend level of activity, and that's going to take a lot longer. What we're seeing is that China is recovering. For example, some of the data on domestic travel during May Day show a nice recovery, 115 million domestic trips. That's up from only 43 million domestic trips in the Qingming Festival that was earlier than that. But that's still down substantially from 195 million for the May Day Festival, the May Day holiday in 2019. So there's a recovery from these very depressed levels, but it's gradual and cautious. It will probably only really accelerate once we get a reopening of the West, Europe, and the United States, such that export demand can really pick up.